Trump versus Biden. Biden versus Trump. What will happen economically if Donald Trump wins? What will happen economically if Joe Biden wins? I want to thank Luke Groman of Forest for the Trees, LLC, for providing the most succinct answer to the most important questions of our time yet. And what he did was he came up with this marvelous table that has a Trump win, a Biden win, and if they're dealing with a Democratic Congress or a Republican Congress. So it's a quadrant of the economic outcomes that we will have in each instance. And here is this brilliant table. A Trump win, a Biden win, Democratic Congress, Republican Congress, and in each case, more federal fiscal stimulus monetized by the Fed and the U.S. banking system. And that means print. That is the answer, regardless of who wins this election. And that means gold and silver will give fiat currencies a knockout blow. So, where is the economy heading? Well, let's take a look at this always cracks me up. Federal debt, total public debt. So the politicians get to spend it, and they stick us with the bill. Because they keep on promising us stuff, free stuff, and the public can't seem to discern the difference between the free and not so free. They don't realize that we're going to pay for it, that it adds to the public debt, and that it is absolutely crushing the country. But what we see here is this sudden increase, and this is as of the second quarter of this year, and so we're up at 26 something trillion dollars, almost $27 trillion right now, heading toward 28 trillion. This is the compounded annual rate of change. So it's showing you the speed that this, that not just the scale of it, not how big it, just how big it is, but also the speed of it. And what you see here, this is the global financial crisis of 2008, the Lehman crisis and everything else, where we almost had the entire world financial system break down. And then this is the response to the plandemic. And here we have something even more important. The total public debt as a percentage of gross domestic product. So this is how much debt and our ability to pay off this debt in the future, because you have to have an economy, a healthy economy, to be able to pay back debt. And what you see here, the great precious metals bull market of the 70s, one of the greatest bull markets of all time. The tech market, bull market, the bull markets from 1980 until 2000, they pale in comparison to this bull market of the precious metals. And it occurred when we were well below 40%. In fact, when gold was peaking in 1980 at $873 and silver was at $50, the debt to GDP was about 31%. Today, it's 136%. This is just a completely different world than the last time around. But what's more amazing is the speed at which this is happening. The compounded annual rate of change shows nothing in history has happened that is remotely close. This, again, is the global financial crisis of 2008 at a 40% annual rate of change. And here we are up at about 155% annual rate of change. So this is huge. So where are gold and silver heading? Well, a couple of weeks ago, I presented this graph, and my chart master, Alan Hibbard, came up with this wonderful chart where I could just click buttons and I could lengthen and shorten the time scale and compress the magnitude of a move. But what I pointed out was that there's this A, B, C pattern. This is called Elliott wave analysis of the 70s bull market. So it started with gold at $35 an ounce. It went up to about $200 an ounce at the end of 74. And that is the A wave. And then there's a B wave to the bottom here, and then a C wave where it went up to the peak of $873. And so I had him overlay the current bull market. That's the green line here. And we took the lowest point between 1980 and today, which was back in 1999. Gold was $253 an ounce. And then, the bull market only goes to today. So what I've got here is the 70s bull market for 21 years, just so you can see the difference in them. But I wanted to know what would happen if I lined up this A wave of the current bull market, and that peak was August of 2011. If I lined it up so I compressed this time scale and the magnitude, so I could push this over and then push it down to match that peak that happened at the end of 1974, the A wave of the previous bull market. And that, coming back to this time scale here that just goes 10 years, this is how they line up. It's a perfect match. I mean, it's, not quite perfect. There's these slight variations, but the correlation here is astounding. I mean, when I saw this, it just sent chills up my spine that this was so perfectly correlated. And the outcome is that what it shows here is that we're right on time, really. It also shows that the duration, the time that this bull market is taking to play out, is 2.42 times as long as the previous bull market, but it's 1.8 times greater in magnitude than the previous bull market. And if it continues to play out in this fashion, which I doubt, I think there are some things coming that are going to be much, much bigger than last time around. The stability of the economy is not as great as it was back in the 70s and 80s. It was bad then, but it's a whole lot worse now. The shocks that we have had to the economy. But if this continues to play out, you can expect in November of 2023, it would mean $11,250 an ounce gold. So over the next 3 years, you would get 78% return per year on your investment in gold. But I don't think that it's going to play out exactly like that. Like I said, things are in a lot worse shape, and they keep on printing currency. So what does it mean? Whether Trump wins or Biden wins, no matter who wins the election, they will never stop borrowing, they will never stop spending, and they will never, ever stop printing, which means gold and silver will give a knockout blow to fiat currencies. I hope you were entertained by this video. We'll see you next time.